This is not financial advice. Please subscribe for more medals. While gold is reaching its all-time high and public interest is high for the yellow metal, there are quite a few things which could go wrong and spell the demise of gold as we know it. Looking at what has happened in the past, we know that owning gold does come with some risks. So, what could go wrong with such a solid investment in sound money? Let's see. Market manipulation. First, central banks can enter or exit the market in a way that manipulates the spot price of gold. We know that ETFs and the like are highly manipulated. A central bank can become a buyer or seller and disrupt real gold prices according to its interests, usually maintaining the worth of currency or manipulating interest rates. Miners and investors could suffer the consequences. This could become troublesome for investors and holders of gold, as central banks are very powerful. And let's not forget the central bank of central banks, the Bank for International Settlements. It's a very powerful entity. Not only that, but interest groups could manipulate gold on their own to achieve whatever their goal may be, usually getting more money or gold. Tax hike. The IRS views gold and silver as collectibles, and there's a maximum tax of 28% for long-term capital gains, as well as taxes for assets held for less than a year. Sometimes there are exemptions, depending on the asset and country, but taxes are considered to be high whenever they're present. A tax hike on capital gains could affect stackers that sell gold, as a bigger chunk of money would be taken off of their hands. They would do that to maximize public revenue, and we know that the dollar is falling and US debt is high. Raising taxes is never off the table, and taxes are often seen as excessive. Increasing capital gains taxes could go very wrong for gold investors. Confiscation. In 1933, Roosevelt confiscated all but numismatic gold pieces from U.S. citizens, paying them 20.67 per troy ounce, and stating that gold hoarding was worsening the Depression. That was an amazing violation of the rights of gold stackers. This could happen again in the event of a crisis, as the government would try to stabilize the economy by deploying extreme measures. That is why diversifying your portfolio is very important, even when it comes to the coins you own, for numismatics have a lower chance of confiscation due to the difficulty in pricing all of this stock. Hawkish stance. The Fed is quite fickle, and some may say that it's political. It may lower rates to encourage borrowing, thus warming the economy. High interest rates are just the opposite. They try to restrain excessive borrowing. Inflation plays a big part in all of this. Right now, the Fed is waiting for inflation to inch closer to 2% to lower rates. This would be beneficial for gold. It usually goes down when rates goes up. Hawkish advisors could suppress the price of gold for a good amount of time. Although lower gold prices mean that you can buy the assets for less, it's not ideal for anyone selling gold. And there you go. This is the tip of the iceberg, but crap could hit the fan. Always be prepared. Please subscribe. And gold is magic.